Well, good evening, everybody. It is finally Friday. My gosh. All right, June 17th, 2022. It's about 9 o'clock Eastern Standard Time here in New York City. We're actually going to be headed uptown. So we are at Cooper Street, but we are going to be headed uptown to the Upper West Side tonight. Beautiful night. Extremely hot day today in New York. It's going to be an even better weekend. And that means we just might be on the skateboard for tomorrow's stream. So looking forward to that. We got a couple of things to cover. Definitely got a couple of things to cover. So I guess to start it off the top, we are going to be talking about Ron Barron. We're going to be covering that for probably the first 20 to 30 minutes of the stream. Obviously, you guys know oftentimes we talk about very notable investors on the channel, such as Paul Tudor Jones, Stanley Druckenmiller. But there's also another, I would say, less notable investor by the name of Ron Barron. Ron Barron that founded the Barron Capital Management in New York City in 1982. And he's really considered to be one of the greatest growth stock long-term investors of all time. He sort of has a loosely based can-slim investing methodology. Obviously, that was coined by the late, great William J. O'Neill. So Ron Barron did an interview with CNBC where he came out and he said that this is potentially going to turn out to be one of the greatest buying opportunities he's ever seen. So we'll talk about that. We're also going to talk about S&P 500 forward multiples or forward PE ratios. We're going to talk about what that historically means, and if we look back throughout history, and if we go based upon the S&P 500's forward PE multiple, what are some of the times throughout history that have been very advantageous to buy? We're also going to talk about how the forward PE ratio could be a little bit misleading, so we'll try to understand that and unpack that a little bit tonight on the stream. We're also going to talk about the 10-year average of the forward PE being about 16.9. We'll compare that in relationship today. Also, Three Arrows Capital, which is the gigantic $3 billion cryptocurrency hedge fund, is going under. They have blown up. So we're going to talk about some potential asset sales and bailouts and restructuring. And then we will finish the stream off talking about the potential top in this commodity cycle. Now, I'm not saying that this is the top, this is the end, but I've been noticing a trend as I've been watching commodities like copper futures, aluminum futures, even lumber futures, being down 67% from their all-time record high. And we're also noticing crude oil sell off a little bit. So on March 7th, 2022, if you look at the ticker symbol CL, which is the crude oil futures contract, we actually hit $130. Now we are trading at $107. So could we have potentially topped, or is this just a little bit of a cool off, a correction in a longer super cycle? We'll talk about it today on the stream. Let me put away my laptop and then I will see who we have in the chat, so bear with me, everybody. But happy Friday to all of you in the chat. Hopefully you had a productive week, and we'll get started in just a minute. Okay, let me know if you guys could hear me, but let's see who we have in the chat. Happy Friday, everybody. Hey, Otto is here, says hi, Tom. Muhammad is here. Welcome, Muhammad. Mr. Ming says, what's up, Tom? Good to see you, Mr. Ming, the ABX girl from the Bronx. Always a pleasure. We have Sally here. Good to see you, Sally. Arctic Trend. Good to see you. Bidzita Lopez, the one and only Lady O from New Jersey, is our great moderator as well. Jeremy says, hey, Tom, congrats on 16,000 subscribers. Yeah, guys, I think we just hit that last night. So thank you all. Thank you everybody for joining the streams, joining in the conversations, walking around New York City and Miami with me. It's been a blast. So thank you everybody. We have now grown the stream to 16,000 people. That's unbelievable. I would never thought in a million years the stream would get that big. Never. So thank you. Appreciate it. Sally is here. Says, hey, Tom. Always a pleasure to see you. Cynthia Beal is here. Welcome, Cynthia. We have OFs. There's lots of uncertainty in the near term. Super cycle it is OF. Riley Smith says, hey Tom, good to see you, Riley. Welcome. Pizza Man says, good evening, Tom. How's everything going? Everything's going pretty good. I mean, no complaints. I mean, honestly, no complaints. Thank God it is Friday. Very seldom do I say that, but it was a crazy week today. I mean, it was crazy week this week. Very busy, but busy is good. That means things are coming along, deals are coming together. But in the financial markets, talk about a lot of turmoil. Talk about explosion in the bond market, which we've been covering, which we've been talking about. Lots of uncertainty in monetary policy. So not only with the Federal Reserve, but central banks around the world, the ECB having a lot of trouble controlling inflation and controlling the bond market. The debt markets are screaming. Pizza Man says, how about that stock market dip today? Good to see you, my friend. Mystery Girl says, hey Tom, congrats on 16K subscribers. Appreciate that. Mystery Girl, you are fantastic. Yeah, Joe Hernandez says, great job on 16K. I was 468, wow. That was many, many moons ago, Joe Hernandez, and I appreciate you still being here, my friend. I appreciate you still being here. Always a pleasure to talk to you, always a pleasure to see you. Wendy England is here, says, my week was crazy like a zoo animal. Yeah, you and me both. But good to see you, Wendy England, and hopefully you have a good start to the weekend. Sunshine After Rain is our good moderator. Thank you so much for being here. Good to see you. Ralph says, what's up? What's up, Ralph? Good to see you. Jeremy, I appreciate the kind words. Valentina says, hey Tom, have a nice weekend. You as well. You as well. So we're at Cooper Square. Here's what I think we'll do, everybody. Let's go to Washington Square Park because it is Friday night. That means it's going to be insanity over there. Love Washington Square Park, especially on the weekends. We'll do a quick lap, but I want to head up to the Upper West Side. We haven't been to the Upper West Side in a long time, so I definitely want to head up there tonight. Diego is here from Brazil. Welcome, Diego from Brazil. NNB 045. As always, good to see you and happy Friday, NNB 045. Hope you're having a good one. Sally, appreciated. Van, good to see you. Charlie Richardson is here. Welcome, Charlie. Let me see if I could adjust my camera here. Pizza Man, I'm not sure. That is to be determined. Cynthia Beal says, hey Tom, congratulations on 16,000. Thank you so much. Really, really appreciate it. Thanks everybody for joining in on the streams. Gregory is here, welcome. And Diane Van says, congratulations on your channel's growth and success. Yeah, I mean guys, there would be no channel without the viewers. The stream would be pretty boring if it wasn't for all of you joining in the conversation, sharing your ideas as we walk New York City and talk about the financial markets. But speaking of that, oftentimes on the channel, I will introduce to you some of my favorite money managers of all time. And that can include anybody such as Stanley Druckenmiller, Paul Tudor Jones, which we talk about quite often on the stream. It can include people like William J. O'Neill, which is the founder of Investors Business Daily. We always talk about him. But one investor that is extremely successful, but he's not really, I don't really want to say a prominent figure because he really is extremely successful money manager on Wall Street, but he's not really in the public eye as many of the other ones are, like Peter Lynch, Paul Tudor Jones, Stanley Druckenmiller, and the like, Ray Dalio. These tend to be money managers that are always in the public writing books and things like that. But Ron Barron founded his investment management firm in 1982 right here in New York City. Now, I believe he has two sons, and supposedly, I'm not sure, but as Ron Barron gets older and maybe wants to retire, I think his two sons are going to take over the family business of running money. So Ron Barron had an unbelievably successful career as a growth stock investor. I think one of his notable trades, or the most famous trade that most people know, is betting on Tesla during the very, very early days when... Does anybody remember, we'll take a quick step back, does anybody remember the day that Tesla went public and they were on CNBC, and I believe it was an episode of Mad Money, or maybe this was pre-Mad Money, when Jim Cramer came out and said that Tesla's a massive, massive short and that it would go out of business in short order. Ron Barron definitely took the other side of that trade and made a fortune for his investors to the tune of billions of dollars, not millions. But he's a very, very well-respected, I think that was a St. Francis College soccer backpack. We used to play them all the time when I played soccer here in college in New York City. But anyway, Ron Barron, founder of the Barron Funds, did an interview, I believe it was yesterday or earlier today, with CNBC. And roughly he's calling for a generational buying opportunity. And he says that this is setting up an opportunity for his sons to be as successful as he was when he founded his firm in the early 80s. Now, this is met with severe, severe controversy for a couple reasons. Now, I guess I'll start off by letting you guys know if I agree with him or disagree with him. I have to agree with him, but I don't think that this particular bear market will be like the bear markets of 2018 and 2020. If we look back to 2018, when I guess you could call it like the taper tantrum-y, the market sold off extremely, extremely hard. I remember the day it bottomed. It bottomed on Christmas Eve in 2018, but what happened there? You know, the Federal Reserve stepped in, lowered interest rates, started their bond buying binge, and we pretty much had a V-shaped recovery right off the lows of Christmas Eve in 2018, going into the early part of 2019. We saw a very, very similar action during the COVID crisis. But what's different this time? And I know that's sort of the famous last words on Wall Street. What is different this time? Well, I think there is a slight difference this time. And we've been talking about this almost ad nauseum this week, and it is the fact that the Federal Reserve is getting extremely, extremely hawkish, as opposed to their historical activities of being extremely dovish anytime we have an extreme stock market sell-off. So I think Ron Barron is correct that if you have a 10-year investment time horizon or even 20-year investment time horizon, if you are buying the market or the overall market, the S&P, at these levels, you're probably going to wind up on the other side in the greens quite substantially in 10 to 15 years. So if you guys want to learn a little bit more about Ron Barron, I tried to punch something in the Nightbot, but I forgot the Nightbot command. But if you just Google him, if you go to his website, the Barron Fund website, you could actually see his long-term track record. And I think he's almost beaten the S&P 500 over the last 5, 10, and 20 years, which is not an easy task, because as we know, about 90% of money managers on Wall Street tend to underperform the market. So his mutual funds have done an absolute amazing, amazing job. So check them out. Hey, Ron Metro TV is here. Good to see you, Ron Metro TV. Long time no see. Oh, Sunshine After Rain. I did give the Nightbot command for the Barron Funds. I have so many Nightbot commands that I forget how many there are. Hey, Mystery Girl, this is Tom. I grew up in Suffolk County 4 years ago. Tom, I grew up in Suffolk County over 40 years ago. Moved to Florida 2 years ago. Love the city, believe it or not. I've been to the city 4 times. Thank you for bringing us back to New York 5 times a week. Yeah, no problem. No problem. Thank you for being here. RJ is here. This is Ola from Colorado. So Sunshine After Rain just dropped in the chat the Barron Fund website. So definitely click that, check it out. And one of the reasons why I'm bringing this prominent investment figure to the forefront, because you guys know I'm very protective of who I recommend you listen to. He is a pure fundamentalist as well as trend trader. So when you listen to people like that who've had a screaming track record over the course of his career, you'll notice some of the commonalities that the greatest investors of all time sort of abide by. And that is buying quality businesses that generate significant amounts of free cash. Because as we've been talking about and as we cover here on the channel a lot, you know, the investment business is all about discounting cash flows into the future and trying to predict or understand the value of a business's future cash flows. And I think if you take that approach, you're going to have a really successful investment career. So check him out, Ron Barron, coming out on CNBC. It was either yesterday or today, calling for a generational buying opportunity. But what do you guys think? Do you guys agree with Ron Barron? Or do you think that the market still has a lot lower to go? What do you guys think? Unlimited stimulus, says Tom. This is the capitulation phase, maybe. Hey, Shadow Ship is here. Good to see you. Michelle O'Rourke, good to see you. Welcome. Always a pleasure. Hey, Valentina says, hey, Tom, happy Friday. Happy Friday to you, too. Always a pleasure. Exploration says Barron Capital has around $6.2 billion in Tesla from a $38 million investment. His average cost is around $50. Yeah. You know, so I think it was Ron Barron. Also, there's another notable investor, doesn't have as extensive of a track record as him. I'm blanking on his name. Hey, Abstract Angel Artist says, hey, Tom, good to see you. Shadow Ship is here. Let's see who else we have. Yeah, Exploration says, yeah, Tom, Ron Barron loves Tesla. You're right. Hey, War Walker says, TGIF, Tomcat, and Mods. Good to see you, War Walker, from the one and only Miami. Juan Vegas says, hey, Tom, how long do you think it'll take for the market to recover from the losses as of late? So I think this could potentially be a prolonged bear market. And here's why I think that. Because I think the number one driver, in my opinion, and again, this is just opinionated here, the number one driver of the market, I believe, is monetary policy. And we've been talking about the differences between monetary policy and fiscal policy on the channel. Let's go this way, let's make a right, and let's go to Washington Square Park. But the Fed is the driver of the market, and there's an old saying on Wall Street to never fight the Fed, or don't fight the Fed. And as of now, you know, we just heard from Fed Chair Jerome Powell. He is very direct in saying that we need to get inflation under control. We just had a 75 basis point rate hike starting June 1st, which was the first of this month. The Federal Reserve started their quantitative tightening campaign, which means that they are going to reduce the size of their balance sheet. And there's been studies done that ever since the lows of the 2007-2008 financial crisis, there's been about a 90% correlation between the trajectory of the Fed's balance sheet, which means the growth of the Fed balance sheet, and the performance of the stock market of the S&P. So what does that mean in layman's terms? As the S&P, or as the Fed balance sheet expands, which means as the Federal Reserve continues to buy mortgage-backed securities and U.S. Treasuries, the market tends to go up. And now we're seeing the exact opposite. We're seeing, instead of artificially suppressed rates, I guess you could consider it a normalized rate environment, or at least we're trying to get there. So with this recent 75 basis point rate hike, that brings the Fed funds rate to roughly 1.5% to 1.75%. It's projected by the end of the year
the Fed funds rate should get to about 3.4%. So if we take into consideration that CPI, the CPI numbers came in, I believe, at about 8.6%. To me, I don't see the Fed easing up anytime soon. So to me, I think we could maybe have like an elongated bear market, maybe lasting 2 years or something like that. But once inflation is under control, once the CPI numbers come down towards that Fed target of 2% inflation, then that may prompt Fed Chair Jerome Powell to start easing again. And once we start quantitative easing, keeping interest rates steady or even lowering interest rates, I think that's when you'll start to see the new cycle emerge. And the only reason why I say that, and I could be wrong, is Jerome Powell was sort of very direct, right? I believe at his conference or at his speech on Wednesday, he had a question about what do you think the impact to the housing market will be due to these rate hikes? And Fed Chair Jerome Powell said something along the lines of, if you are a young person in America today, you are going to want a reset in housing, which means, well, I don't want to put words in his mouth. He's like, look, we're going to raise interest rates and prices are going to come down. So that means prices of homes, real estate, doesn't matter if it's commercial, single family, whatnot, those prices should come down, as well as the price of equities or stocks. The NASDAQ, I believe, is off 36% from all-time record highs. That is the NASDAQ composite. The S&P 500 is off, I believe, 23% now, or 25%. So as an intermediate term trend trader, I think that we just got to watch the Fed. Also, we'll talk about earnings. We'll talk about that in a minute. Hey, No Beefy Productions, good to see you. Natalie says, good evening, Tom. Good to see you, Natalie. We're on Houston Street. So I'll turn around and I'll give you guys a view of the Adidas store here. Hey, Michael says, being outside a lot is tough on your body, especially mentally. You have to refuel yourself constantly. Can't run a machine without servicing it. Good to see you. Don Smith says, heating oil bill will be a big problem soon. Well, we're seeing crude oil futures come down a bit. We're seeing crude oil futures actually come down a little bit. Hey, Valdiers is another subscriber friend from Brazil. Thank you for being here. Mark Francis 076 says, I'm old, retirement is 6 months away for me. Gave my notice to my boss. Well, congratulations on your retirement. It's a fantastic achievement. And please enjoy your retirement. That is awesome, Mark. Unlimited says, Tom, are you DCing into big tech? No, I am not. NMB 045 says, you're probably near Katz's Deli, Tom. So if we keep walking down, we will be near Katz's Deli. We might as well take a walk near Katz's Deli, actually. Jay is here, says, good evening, Tom. Hope you're having a good day. I'm having a really, really good day. Ming Foster says, Tom, Katz's Deli is further east. You are correct. So maybe we will head further east. We'll see. Cynthia Beal, welcome. So here is a metric that I wanted to talk about. Here's a metric that I wanted to talk about that I think that's important. Obviously, you guys know that in my actively managed account, where I have to report a P&L every year, I'm about 95% cash. This has been the highest cash positions I've ever been in. And I think if you're running money for somebody, or let's say if you are a hedge fund manager, something like that, you need to essentially manage risk. That is a requirement. You can't afford to ride these things down 80%. But in my long-term retirement accounts, that is where I will dollar cost average into the S&P 500. Now here's an interesting statistic here. So let's talk about forward PE ratios on the S&P 500. So the S&P forward PE multiple has now declined to 15.5. Maybe I think it's right around 16. You guys could actually look this up yourself if you go to the wallstreetjournal.com and just do, I think, PE metrics. So if you go to Wall Street Journal's website and just type into the search bar PE metrics, you'll be able to see the current forward PE of the S&P. So why do we talk about forward PE multiples? Well, because on a historical basis, I believe the 10-year average of the S&P 500 forward PE is roughly 16. I think it's about 16.5 or 16.9. So right now we are about at 15.5. So based upon historical trends, and if we go back to the previous two market cycles, or I should say bear markets, so the 2018 bear market, in which case we actually bottomed on Christmas Eve, the forward PE of the S&P 500 got down to about 13.5. So it traded at 13.5 times projected forward earnings. If we fast forward to 2020, obviously that was the COVID crash. The S&P got all the way down to 13 times projected forward earnings. So why is this important, and how can it be a little bit misleading, where I think we need to keep our eye on it a little bit? If you just basically look at these numbers and do not take any other factor into consideration, then you would say, okay, if the S&P gets down to about 3,200, I believe as of today's close, we closed at about 3,674. 3,674. If you were to say, all right, I want to buy the S&P 500 at a 13 times forward P, well, that means you got to wait until the market sells off roughly another, 450 points, give or take 450 to 500 points. And that implies about an additional 12 to 13% downside risk to the S&P. But let's take that a step further. Assuming, this is a really nice Tesla here. Assuming the S&P does find its way to 3,200, that would imply a forward P multiple of 13 times. But here's what most people are not taking into consideration. Let's assume for a moment that the US economy does fall into recession. Those forward earnings projections could come down quite substantially. And I think they may do that. And we've already been hearing from some customers, from some companies in the S&P 500 that are actually coming out here and revising down or lowering their earnings projections for the entire fiscal year. So let's say we have earnings season roll through, and we actually have companies reporting earnings either in line with analyst consensus or a little bit below or missing earnings expectations. In addition, after the call, they are giving profit warnings and saying, hey, we know that we gave you a forward guidance for fiscal year 2023 or what have you. Due to changing economic climate in the United States and recessionary pressures, we are actually going to lower our earnings targets for the fiscal year. That means analysts will start downgrading a lot of stocks across the board. Analysts will also start to downgrade those earnings projections, so the P in PE can change. So assuming we go into a recession, I'm not saying we are, but I'm just trying to walk you guys through the dangers a little bit of following just a forward PE based on just one valuation metric, because they're not constants, right? These are, I guess you could call them malleable. They are subject to change. Earnings can change, and as inflationary pressures ramp, look what we talked about on the stream last week. Target coming out saying that their gross margins are going to compress all the way to 2%. Earnings are going to decline. So if earnings decline further, maybe a 13 times forward earnings would be around S&P 500, 2,900. So just something to keep in mind there. But here's what I will say, sort of piggybacking off of what Ron Barron was saying. I think if you're a young guy or girl right now, entering the workforce, let's say you just got a job, you're making 50 to 70 grand a year as your first job, I think it would be wise to at least start investing now, because valuations have come down, even though they could come down even more. I think this is a very, very good time to start, if assuming that your time horizon is on like a 5 or 10 year time horizon and you're buying the general stock market or the S&P. OF says there is a lag in reporting. Yeah, and earnings estimates could go down as well, so you're 100% right. Anthony Johnson says, I didn't really like New York City in a major way until thought about how close Europe is. Mark Francis 076 says, I invested in some 420 and I'm now enjoying the dividends. I don't know if I'm reading these wrong or are these just typos. Not Beefy Productions says, if there is a recession that we can assume will happen, what will it take to bring us out of a recession? More spending, more printing, lower expectations or averages? No, well, I think that that's a good question, number one. It's a very good question, number one. But I think that the Federal Reserve, and I guess you could even call it modern monetary policy, has conditioned everybody to think that recessions are these big bad things that shouldn't happen. But it's actually quite the contrary. These are things that should happen. And they're actually very healthy for the long-term health of an economy. But ever since the lows of the 2008 financial crisis, the Federal Reserve, anytime the stock market flinched and went down 20%, we just ramped up the money printer and floored interest rates to zero. So we haven't really been able to experience full-on recession, because recessions are actually good. It sort of rids the market of any irrational exuberance. It rids the market of any unnecessary investment or spending. Because I think that's the most important thing about free market capitalism is when you have investment and the investment doesn't work, the market is telling you, okay, this is not a good product or service for a reason. But if you have easy access to capital, and the access to capital is extremely, extremely cheap, meaning you could borrow money essentially for free, factoring in the inflation prints, well, then that's not really free markets after all, is it? That promotes speculative activity, it promotes malinvestment, and it creates zombie companies, which we've been talking about and going into oftentimes on the stream. And many of those zombie companies reside in the Russell 2000. Hey Raul, good to see you, my friend, and happy birthday. Zabatatis says the most important question is, does Elon will keep Twitter's promise and take his future employees to Disneyland? Tom says irrational exuberance is a fantastic description. Thank you, Tom. Good to see you. Van says there will be a big boom, or will there be a big boom in a year or two or three? Maybe. Jay is here. Good to see you. Juliana is here. Welcome. Hey, FredX says, evening, Tom. Still working, but catching up on the stream. Well, hopefully you're having a fantastic day at work, and happy Friday. Hopefully you have some amazing things planned for the weekend. Anthony Johnson says, when you live in USA and from USA yet is employed in Canada. All right. Good to see you. Gregory's here, welcome. Hey, Bagels and Walks is Tom. If you covered the Mermaid Parade tomorrow, how would you link it to the stock market? What is the Mermaid Parade? I don't know what that is. Pat says this is probably the best time to put as much money into the market as possible if you missed the COVID crash, says Pat. Interesting thought. So Pat, why do you think that? For maybe if you could expand on your thesis a little bit, I think we'd all like to know. Juliana says hello from the Philippines. It's 9:30 in the morning here. Good to see you, Juliana. Jay says we're near NYU. Absolutely we are. So one of my favorite professors of all time is actually Professor DeModeran. He's a professor of business at the Stern School of Business right here at NYU. And he's widely known as the Dean of Valuation. So even though he doesn't invest for a practice, or he's not an investor, he doesn't run money, he's an academic, and I still think it's important to listen to academics. So if you follow him, he actually has a YouTube channel where a lot of his classes or lectures at NYU, he posts them online for free. So if you're interested in learning about deep fundamental securities analysis, how to build discounted cash flow models and things like that, essentially how to discount companies' cash flows into the future, evaluate their cash flows, I think DeModeran is a really good resource for that. He has multiple books out there that you could buy used on Amazon for like $1. I mean, these are probably some of the greatest investments in terms of ROI you could possibly make. Is just picking up a book. I think the used section on Amazon, you can pretty much get any book you want for a couple bucks. So really good stuff. No cucks allowed. Is he a Keynesian economic or economist professor? He is not. Juliana says, Walks, please, I want to see some places. Good to see you, Juliana. Zabatatis says, a boom upward is unlikely. There's so much money printed already, assets still very high, and no new market, i.e. people. Yeah, I definitely think you have a good point there. And guys, we have to understand we are just starting quantitative tightening. Where we literally just started. And as we talk about on the channel, if you want to know where the stock market's going to go, you got to look at the bond market or the debt market. And right now, not only in the United States, but global bond markets are really, really hurting right now. So we've been seeing this uncontrolled, or what I would like to call an uncontrolled sell-off in the debt market. We've been seeing yields going to Mars or the moon or whatever you want to call them. That 10-year treasury, the 2-year treasury, really getting a big bid here. And as we know, there's an inverse correlation between bond prices and yields. So if yields are really, really going to the moon, in the tune of 10 to 50 basis point moves a day, which is insane, that means there's a massive sell-off in the debt market. But if you look right across the street, this is the Stern School of Business. So the NYU Stern School of Business. And this is where Professor DeModeran teaches his classes in securities analysis. So if there's anybody in the chat that is interested in a career on Wall Street, I would definitely check out his page. So Professor DeModeran, a lot of the times he will, once again, post a lot of his analysis and his lectures for free online. So maybe if you're interested in a career, maybe you want to be an investment banking analyst when you graduate college or something like that, I think he's a really good resource to follow and look at. So please check him out. Gregory, it's good to see you, man. Hopefully you're well. Hey, Brian is here. Says happy Friday, Tom. Good to see you, Brian. Jay says, how much do you believe that we are going to have a food crisis? I think that's a good question. Jay. I think the biggest threat of a potential crisis of that amount is going to have to depend on if supply chains heal. Hey, Mark Francis 076, thank you so much for the $5 donation. You are very, very kind, Mark. I appreciate it. Thank you for supporting the channel. Really, really much appreciated, Mark. But to your point, let's talk about supply chains for a minute, because I think it's really important, especially based upon our discussions of inflation. So I think there's two main factors at play here. And I do think that maybe on the stream, we could have been underplaying a little bit the impact of supply chains affecting inflation. I know it's easy for everybody to point the finger and say, and on the stream I like to take both sides of the argument. I try to present one side and then present the other side, because I think it's good to have as much data as possible. We're walking through Washington Square Park, by the way. But one of the things that I think it's really important is because, on the news, I think you can sort of get propagandized, both on the right and the left. If you're sitting watching Fox Business all day, you can get propagandized via towards the right. Same thing if you're on CNN Business all day, you can get propagandized to that side. And if you notice, the only topic of inflation that anybody's really been talking about is inflation is all Joe Biden's fault, or inflation is all Kamala Harris's fault. And on the other side, inflation is all the Republicans' fault because they won't let the Democrats do anything. But I think there's a little bit more to it than that. Supply chains are putting a massive, massive pressure on inflation. If we've been listening to a lot of the major C-level executives across the S&P 500 suite, they're actually saying the same thing. They said not only are supply chains impacting earnings, they're actually compressing profit margins. And they have led to extreme inventory buildups at companies like Target, at companies like Walmart. Because as we were emerging out of the COVID pandemic, if anybody was in procurement or supply chain at any company, it's really, really hard to forecast or to get a good forecast on not only what demand will be, but lead times for a lot of these products. And I've been having a lot of problems with that in my daily life too, because obviously I am in enterprise tech sales, and sometimes we have to custom build products and services for customers, and semiconductor shortages and supply chain mishaps can really be a big issue, and I have to pass those costs on to consumers. So the point I'm trying to make is, imagine if supply chains heal and are normalized by the end of 2023. How many points in relation to the CPI do you think is directly correlated to supply chain? I think it's going to be a lot more than we think. So if we can come together as a country, and obviously abroad is going to be very hard to solve the supply chain issues in terms of factories in China shutting down due to the zero COVID policy and all that. But I think if we could solve supply chain issues, I think we're going to see a lot of relief for the American consumer in relation to inflation. So going back to Jay's point about a potential food shortage, I think a lot of that has to do with supply chain. We've been seeing a lot of factories, unfortunately, catch fire and things like that, so that also adds to the cogs in the supply chain. But I want to know your thoughts. What do you guys think about that sort of thesis? Because I think it's easy just to say, we printed a bunch of money, there was horrible fiscal policy, horrible monetary policy, so we're having inflation. But maybe there could be more factors. Maybe there could be more factors that go into play here. What do you guys think? Hey, Mystery Girl says, I paid $100 to fill up my truck today. It was only a little under a half a tank. It used to cost $40. Wow. Well, I guess if you want a little bit of good news, crude oil futures are actually coming down a little bit. And I know that's not gas prices, but usually as crude comes down, the price of gasoline will come down as well. I believe in March, we hit a high of about $130 on the ticker symbol CL for crude oil futures. And now I think we're trading roughly about, 107 or 109. But everybody, check out the World Trade Center here. It looks beautiful tonight. And as always, if you're enjoying the stream so far tonight, feel free to leave a like on the video and subscribe to the channel if you are new. Jake from Florida is here, says, yeah, $200 for my diesel truck. Wow, Jake, that's insanity. Fred Wang says, the mainstream media are blaming the supply chain too. This is Fed Wang. Good to see you, Fed Wang. Love the username. Don Smith says, think what would happen if China attacked Taiwan? Well, you know, we heard from Tim Cook, which is the CEO of Apple, actually moving a lot of the production of the iPhone and the iPad outside of China due to their zero COVID policy. You know, it's strange. In Washington Square Park here, you could literally go to any one of these stands and buy marijuana, pre-rolls, and things like that. It's a little bit weird to see, but I guess kind of cool. It appears they're having some sort of movie night. We'll check it out. Hey, Brad's brain is here. Good to see you. Miss Brown Eyes, welcome. This is Hey Tom, TGIF. TGIF to you. I hope you're well. Miss Brown Eyes. Road Dog 41. Says oil sucks. Yeah, tell me about it. Dr. Longus is a perfect storm for inflation. Yeah, 100% right. It's like if every single factor that could go wrong to influence inflation is happening or has happened. But you know, a little bit later in the stream, we'll talk about, is this commodity boom actually ending? You know, there is signs in the marketplace right now. If we look at the futures contracts of aluminum or copper, these things are actually coming down, so we'll talk about that. I wonder what movie they're playing. Hey, Carson's here. What's up, man? Good to see you. Says, hey, Tom, I think we'll see a bunch of companies start to bring production back to the United States. At some point, the cheap prices overseas are not worth the uncertainty. I agree. Carson, I agree. I mean, we saw that. Tim Cook and a lot of others. I think a lot of semiconductor fabs and things like that are starting to reallocate resources because they just can't rely on China, especially if they're going to continue zero COVID policy. I think I'm getting a little contact high. G. Lewis says China will not attack Taiwan. They will protect it because it's part of China. Lily is here, says saludos from Panama. Good to see you, saludos to you. Yeah, Smarty Pants says New York is like pre-pandemic times. It's like a big party in the park. You're right. I gotta make a move out of this spot though. I don't do well with smoke. But does anybody know what movie that is? Maybe if there's any movie junkies in the chat, you could let us know what sort of film that is. It looks like a pretty good film. NMB045 says that's a French movie, question mark. I don't know. I'll have to Google it or look it up online, but it looks pretty good. Looks pretty good. Hey, Mark Francis says copper inland fills a third of copper and telephone wires and a third in the ground. So Mark, one of the things that I was also considering is we got some data out of the housing market in terms of housing starts falling off a cliff. I think housing starts are down about 14%. And judging based upon that fact, housing starts down 14%. What does that mean for commodities? You're not going to have to buy as much lumber. You're not going to have to buy as much copper and aluminum. Those are the key things that go into making houses for like electrical work and framework on a home, things like that. So we'll do one more lap around Washington Square Park and then we'll head out. I want to head uptown. Zavatata says aluminum is not very reliable. One, because some smart guys literally stock mountains of aluminum in Vietnam, waiting for a great price. Yeah, I think we may have to make a move out of the park. I think I'm getting a little bit of a contact high here, everybody. But it's good to see that many people are out and about again in the city. It may be a French movie, NMB 045, because I see the subtitles on. So I think you're right. Hey, Chris Beeman, what's up? Good to see you from Arizona. All right, let's try to see what this movie is. Hey, Carlos is great talk. Good to see you, Carlos. Welcome.
Oh, je suis bien votre pareil. Oh, je suis bien pareil à vous. À vous comme le grain de sable, comme le sang toujours versé.
Man, look at all the people out there.
Comme les doigts toujours blessés. Oh, je suis bien votre semblable.
C'est quoi ton nom de famille?
Faut-il le nom? Ça te plaît? Quel prix?
Hey, Christopher Finch is here. What's up, Christopher? Good to see you. We're taking a look at the movie night in Washington Square Park near NYU. Tio says this is NYU hipsters pretending to like the movie. Man, I want to laugh at that so bad.
Pour l'instant, le présent était donc banal.
Hey, Brian is here. Good to see you. Hey, Manthony18 says Tom streams are never dull. Thank you, Manthony. But it's good to see everybody out and about again. I'll give you guys one more view of all the people, and then we'll head to the Upper West Side tonight.
Je rigole pas, c'était un sergent fou. Bon, d'accord, je vous expliquais le cessez-le-feu. Arthur déclara à son oncle qu'il ferait coup avec eux et qu'il le ferait de
Brian says, what is your favorite thing to do in the summer? Skateboarding. Skateboarding or going to the beach, the ocean, hanging out. Hey, Iris Lewis says, good evening, everybody, and Tom. Good evening, Iris. NMB 045, you do understand French. I remember you're from Montreal. Very cool. Thirteens is great to see you. Enjoy the high. It's okay. Dr. Longest says, haha, pretending to like it. I thought the same thing. Yeah, I mean, you gotta get yourself into the hipster mindset where you definitely understand everything, and things that really don't even need to have a meaning, they have a really deep meaning. And you could analyze or psychoanalyze something to the point of ad nauseum. All right, well, that was fun. I'm trying to figure out which way we should head. I'll give you guys a view of the arc and then we'll head out. Hey, Jewel Mars says, Tom, supply of rare gases used in hospitals made by 2 countries in the current war supply chain issues. Yeah, we got to get a move on. Yeah, I think I may be allergic to, I'm definitely allergic to cigarette smoke, but smoke in particular of any kind, I just can't deal with it. I may have to stop and get a water someplace. Daryl says, how's your allergies today, Tom? Allergies are good today. I think it's just the marijuana smoke that's getting to me today. Not me smoking it, but I mean, Washington Square Park is an absolute plume of marijuana. Yeah, I'm just really sensitive to that stuff. Like cigarette smoke, I can't even be around it. I get really sick. All right, so we'll head up Fifth Avenue. All right, let's find a place that has water. Hey, South Beach Trader is here. Good to see you. Man. Jeez. I never really get like that. I don't know why I'm acting up so crazy right now. Yeah, sunshine after rain. Yeah, I'm good. Trust me, I'm good. I'm just severely allergic to all types of smoke, like bad. Mario, I think you are.
Yeah, that was awkward. I feel like the last two were so.
Somebody says the chemicals in the smoke are not bad, are bad for the lungs. I think I'm good now. Usually I'm good in Washington Square Park, but man, tonight, if you guys are in the city, take a walk through Washington Square Park. It's like the whole thing is a smoke plume. Oh my God. But it's good to see that people are having fun, having a good time. Lars says, hey Tom, are we going into recession? I think it's possible. I think it's very possible. Let's walk this way because we'll take a look at St. Mark's Place. I want to show you guys St. Mark's. So the thing I was saying is, in terms of the S&P 500 forward PE, we're starting to come down a bit, which historically signals a big long-term buying opportunity. But the only thing that we really need to worry about or focus on is the earnings part. Right, because these are future projected or forward projected earnings, and that's not a constant. So that is definitely very malleable. So those earnings could come down, they could be revised lower, and I think they may be revised lower. So S&P 500, 3,200. So if we get down to 3,200 on the S&P, that implies a forward PE ratio of 13. Hold on, let me clip my microphone back on. I took my microphone off because I didn't want you guys to hear me coughing. I felt so bad. All right, please stand by. Hey, Ann is here. What's up? Good to see you, Ann. Alrighty, team, we're ready to rock. Apologize for that, but I do not do well with smoke. I mean, geez, wow. Hey, photos from around New York. What's up? Good to see you. We just did a quick walking tour of Washington Square Park. We had to get out of there because the smoke was, I'm allergic to smoke. It was getting at me way too much. Yeah, Anna's like, you okay? I'm good. Ed T says, Tom, you walk a crap load, so I think your lungs are good. It's just the smoke is a no-no for you. Yeah, I'm allergic to smoke, especially cigarette smoke. But in that concentration, it's like a hot box in there. So anyway, so check this out, everybody. For those of you who are just joining, I think this is very important to pay attention to. So historically, well, let's just start off by telling everybody and exploring the 10-year average or the 10-year forward PE of the S&P 500. So over the past 10 years, the average is about a 16.9 times forward projected earnings from the S&P. That's the average. Right now, I think as of today's close, we are about a 15.5 times forward projected earnings. So technically, buying now, if you just buy the market, we're talking about the S&P 500. We're not going to go into individual stocks tonight. Maybe we'll do that in another stream, but you're technically buying it below the 10-year average. But here's why you need to be just a little bit cautious, because these are projected earnings, remember. So these are not fixed, meaning that these are very malleable and subject to change. So if we look back throughout history, the two previous bear markets that we've all lived through here on the stream and on the channel, that brings us to 2018. So 2018 is when the stock market fell into a bear market and actually bottomed on Christmas Eve. Does anybody remember that? I remember that. I remember where I was. I was sitting on the Long Island Railroad, and I remember just the unbelievable fear on Christmas Eve, that sell-off. And during that time, at the lowest point of the 2018 bear market, the S&P 500 had a 13.5 times multiple in terms of forward projected earnings. So 13.5. Right now, we're about 15.5. Fast forwarding to 2020. Oh, guys, real quick. So Wegmans is coming here. For those of you who don't know what Wegmans is, I believe it is a grocery chain based in Rochester, New York, which is upstate. This grocery store is better than Whole Foods, in my opinion. So it's coming in 2023. I'm really excited for this. This is a fantastic grocery store right here, Wegmans. So it is coming to Astor Place, right on the corner of Lafayette Street right here. Sorry for the distraction, but so if we fast forward to the most recent bear market in recent history, that brings us to 2 years ago, which was the 2020 COVID pandemic sell-off. So at the bottom of the pandemic, or the bottom of the market, the S&P 500 was trading at a 13 times forward projected earnings multiple. So let's say, for argument's sake, if you said, okay, the market over the past two bear markets has bottomed when it has a 13 times forward PE. Well, I want to buy when the market is at a 13 times forward PE. Well, I actually calculated that for you guys. Don't worry, I have you guys covered. So assuming that you want to buy the market at a 13 times forward multiple, that's going to imply an S&P 500 price of 3,200. So where does that bring us in relation to now? Well, I believe at today's close, so as of 4 p.m. today, the S&P closed at 3674. So 3,674. So that implies an additional downside move of about 450 points. Or about, what is that, 12%?
We all know this song.
Can anybody do that math real quick? So we're at 3674. If we fall to 32, what is that on a percentage basis? 12%? I don't know. You guys get the gist. But so now that we know that, if you say, okay, I have a retirement account, I dollar cost average in the S&P 500, and I want to buy at a very, very low forward PE multiple. So I'm going to wait for S&P 500 3,200. So here's the only other variable that you need to keep in mind. Earnings are subject to change. Okay, this is the projection on earnings, assuming earnings don't go down. You know, if we fall into a recession, so if the US economy goes into a recession, there's a very good possibility that as we fall into recession, consumers may stop spending. They may be cutting back on spending on traditional goods and services. Maybe businesses start to lay off their workers, in which case businesses will halt or stop or severely cut back on their investments. So what does that mean for corporate earnings? Corporate earnings could also therefore decline. So if the S&P 500 gets to 3,200 and we have a wave of companies within the S&P coming out and saying that they are going to revise lower their fiscal 2023 earnings estimates, well, maybe a 13 times forward PE for the S&P is now at 2,900, or maybe even lower. So I think we need to be cognizant of that as we look at these different valuation metrics. That'll help us to potentially identify a good buying opportunity, but you know, just always keep in mind that earnings may be subject to change. Right, the companies have to post the results. But here's what I will say. I think that I agree with Ron Barron that came out on CNBC today and said this is in the works of becoming a generational buying opportunity. I agree. I think the bear market duration can be a lot longer. So maybe we trade in a range for a year or two. But I think if you're young in your working career and you're diligent in investing, no matter where the market goes, I think you're going to have a pretty healthy return over the next, let's say, 10 to 15 years. That is my view. But so based upon that, what are your guys' thoughts about that? Hey, Kurt Flirt too, good to see you. Happy Friday. We're walking around the East Village area. Beautiful night. A lot of people are out tonight too, which is awesome to see. Cynthia Beal says Tom is stubborn. Even the food cart has water. Yeah, I think I'm good. I think I just need to keep trucking along, but I appreciate it. We may stop in a Grand Central Station tonight. We'll see. Hey, Mike Skate TV says hi. Good to see you, Mike Skate TV. So check out these outdoor dining stands here. Very unique. Hey, Duke Coco says compressed capitalization rate. Hey, Jeremy says I am back. Hey, Jeremy, good to see you. Ooh, we got a rat right there. See his tail? Hey, Kenneth, good to see you. Carson says I got 12.9%, so I wasn't too off. Not too bad. Yeah, Ken Glass says Wegmans is awesome. I go every week. Love Wegmans. So here's my opinion. And again, I may be totally wrong, but I think if you're a young kid, especially if you're in college right now, and you don't have an investment account, I think right now is the best time to open a long-term retirement account and get started. Because guys, think about it. Just think about the velocity of the sell-off here. This is good. This is going to bring a lot of opportunities because a lot of people have gotten just absolutely. I'm talking about hammered. You have some of the best hedge funds on earth, like Tiger Global, considered to be one of the most sophisticated hedge funds on the planet, down 50% now. If you can preserve your capital, this next bull market, you're going to get. I mean. You should be chomping at the bit at these opportunities. I'm not saying rush into the market and buy. What I'm saying is if you're young enough, you're just starting a working career, you're in college, I would start, ooh, that was almost a big accident. I would start to open a brokerage account and just start learning about the stock market. and make your first investment. Buy something. Buy the S&P outright. Because if you think 20 years from now corporate profits or corporate earnings in America will grow and we will break back above new all-time record highs, well, you're looking at a 30% return on the upside. Which I think in 20 years, my macro bet is in 20 years, US companies will be producing larger profits than they will today. And I think in 20 years, I'd say about 15% of the companies that are in the S&P 500 right now will not be in the S&P. And I think they will be replaced with newer emerging companies that are extremely, extremely disruptive. Over the next 10 to 20 years, we're going to have more Teslas. We're going to have more Alphabets. We're going to have more Microsofts. It's never going to stop. So long as free market capitalism continues to crank on, this is not going to stop. So just be cognizant of that. Fred Wang says, good analysis. We want a stock reset, just like the housing reset, says Fred Wang. Road Dog 41, good to see you. I'm a Monster, says VOO. Yeah, so VOO is the ETF that tracks the S&P, the Vanguard ETF. Somebody says, did you play Roku today? I don't have Roku. Hey, Prospect Basement says, hey Tom, are you going to Tompkins Square Park? Probably not today. I think I'd probably have an asthma attack if I went to Tompkins Square Park. We already went to Washington Square Park today. All right, so this is St. Mark's Place. Hey, photos around New York's like lots of Oregon and Washington State plates. I've noticed that too. I've also noticed an extreme amount of California plates too, photos. Hey, Bagels and Walks says the city is alive tonight. Yeah, especially the East Village. All right, I'll take you guys through the East Village and then we will head uptown. I want to try to end the stream right near Columbus Circle, so we'll try to do that. But if you guys are enjoying the stream so far tonight, feel free to leave a like on the video and subscribe if you are new. Yeah, Cynthia Beale says it was very hot and humid in New York today. That it was. I think it was like 94 degrees. It got up to about 94 degrees in New York. Hey, Steph writes says hello from Liverpool, England. Good to see you. Hey, Ran says, excuse me, I've been busy at work. Hopefully work is going well for you. Production says, thank you for the walk and talk throughout New York. Thank you. I see Ryan Royal here. Good to see you, Ryan. So we're about to walk past one of my favorite noodle places in New York, but here's the bad thing. I think it closed down. We're going to have to go check out and read the sign, but I wanted to go there for dinner tonight, and it was closed, which was a total travesty, because in my opinion it is one of the best noodle places in New York City. So we'll have to check it out. You know, St. Mark's Place is actually looking pretty clean tonight, which is a little bit out of character. Pretty clean. I think sanitation is doing a fantastic job. Hey, Bob is here. Says Bloomberg says El Salvador has lost $56 million on their Bitcoin reserves, or more than half recently. I think it may be actually a little bit more than that. I think you're right, but I actually think it may be more than that. But good to see you, Bob. Lewis says, is this Chinatown? No, this is the East Village or St. Mark's Place. Hey, Thomas here says in New York there's hot island syndrome. The temperature rises, everyone runs their AC, and it pumps out extra heat. You know, I was reading about that. Also, what I think could be a big issue is rolling blackouts this summer in New York City. So let's, please God, hopefully we don't get that. But here we're coming up on one of my favorite noodle spots. Oops, sorry about that. We're coming up on one of my favorite noodle spots here. But check this out. We'll check out the sign. We'll check it out together. We'll see why it's closed. But here's a little bit of a bird's eye view from St. Mark's Place in New York City. It looks like this restaurant is actually pretty popular. Look at the line. Hey, Prospect Basement says, Tom, always keep cash on you in case of blackouts and the machines don't work. Twitch ASMR says, hey, Tom, does New York City collect trash every day? I don't think so. I don't think they collect it every day. In Miami, I think my garbage day is every Tuesday and Thursday. I think Tuesday and Thursday. And I think it may be the same here in New York City as well. So here it is, but it's closed. So it's Uden St. Mark's Place. But check it out. Oh my God, it looks like it caught on fire. It says temporary closed due to fire damage. Follow us on Instagram at Uden St. Mark's for more updates. We will be back soon. That is so heartbreaking because this place was the best place ever. I'm going to have to check it out. Hope maybe they have like a donations page or something up where we could help them out, but I didn't even know that. I mean, hey, if Photos from Around New York is in the chat, did you hear about any fire on St. Mark's Place? I never heard about that. I just went to this place like 3 weeks ago. Man, that's unfortunate. I walked past it today, but I didn't have time to read the sign. But yeah, it says it caught on fire. That's horrible. Ryan Royal says, I hate to hear that. Hope they'll be back open soon. I know. Yeah, Ryan, if you come to New York, you got to go to that place. And the reason why it's so fantastic is because it's so cheap, too. I think that's one of the only places in New York City you can get a meal for like $10. You know, there's no places anymore where you could get a meal for like $10. Photos from Around New York says, I didn't hear about it at all. Could have been a grease fire in the kitchen. Yeah, it's insane. So Photos, another question for you. Have you been there? And if not, you got to check it out. Because it's extremely affordable. It's like $10. You get a lot of food and it's a really, really nice place. Yeah, Gregory says, according to their IG, they are cash only, probably to keep prices down. Yeah, so they are cash only, and that's the other thing. So I only go there when I have cash, which is almost never. Because you guys know me, I hate taking out cash. Hold on, I actually think I may have water with me today. Maybe soon. All right, let's head uptown. And hopefully we could end today's stream near the Upper West Side. The last time we've been there was quite a long time ago. All right, East 9th Street headed uptown. It is a hotter than normal day today. Hey, DC's finest stream says, wow, this stream is crispy. Thank you so much, my friend. Always appreciate you joining. Appreciate the support. Iris Lou says Japanese food. Iris, you know where there's a lot of good Japanese food? There's actually a lot of good Japanese food in Miami, a lot. Hey, Gustavo says, can't wait for 2026 FIFA World Cup in New York. Good to see you. Hey, Prospects says Tom is getting his steps in tonight. Indeed we are. Dr. Longus is cash only for tax reasons. Perhaps. We won't talk about that too much just in case the federales or the IRS is watching. We don't want to throw them under the bus. Eduardo, good to see you. Membership is from Brazil. So thank you everybody who's been watching and supporting from Brazil. Really appreciate it. Here's some more outdoor dining here in New York as we work on passing East 11th Street. Yeah, East 11th Street and 3rd Avenue, I believe. Here's some more outdoor dining structures. So in other news, everybody, we had a massive, major cryptocurrency hedge fund, about $3 billion in AUM, or AUM is the acronym Assets Under Management. Go bust. So we're going to talk about the liquidation process. Hey, Mark Francis 076, thank you so much for the $5 donation, much appreciated. Thank you for the continued support on the stream. I much appreciate it. But 3 Arrow Capital looks to consolidate its asset sales, potential bailout by another prominent cryptocurrency hedge fund, which I won't say the name because I actually have some information about this firsthand. But as we've been talking about on yesterday's stream, one of the problems with a lot of these crypto hedge funds is they over leverage. So a lot of the times they can get ridiculous amounts of leverage. I'm talking about, 20-to-1 leverage, sometimes more. And when the market starts to move against them, it's a cascade effect of margin calls. So you've been having record amounts of liquidations in the cryptocurrency market as of late. And I think you're going to start to have other hedge funds or other crypto hedge funds really capitalize here on the mismanagement or risk management strategies of hedge funds like 3 Arrow Capital. Now, this isn't about dumping on them and making it seem like they're bad investors. They're not. I mean, everybody makes mistakes. But at the end of the day, when you over leverage, especially in a market that's as illiquid as the cryptocurrency market, and knowing that we are in an economic climate and a new monetary climate when the Federal Reserve is raising interest rates, a lot of lenders are going to start to get a lot more conservative, so they're probably going to call these loans and you're going to have extreme margin calls. And in order to meet those margin calls, you're going to have to sell assets. So as everybody starts to get margin called, that creates a cascade effect in the market where people are just selling anything. It may be a good fundamental company. They may start selling stocks to meet their margin call for their cryptocurrency investments. And this is how big funds blow up. And I suspect, I can't say with 100% certainty, but it is possible that Tiger Global is in the same predicament. They're down about 50%. Now, for those of you who don't know who Tiger Global is, they are really renowned to be one of the greatest hedge funds of all time. One of the most prominent, most prestigious hedge funds. They're actually right here on Park Avenue, and they're now down 50% for the year. So this market sell-off is not just affecting the average retail investor. So if these professional investors are down 50%, retail must be obliterated. Hey, Mark Francis says, hey Tom, I never understood crypto. Yeah, I think the vast majority of it is rather nonsense, but I do see some use cases in things like Bitcoin and the like. Hey, the Mighty Bull is here. Good to see you, Mighty Bull. Always appreciate you watching.
Hey, it's you there, yeah?
This is actually pretty good, $2 each. 2 for $3 strawberries. It's actually not bad, everybody. It's actually a pretty good price, not gonna lie. It's actually pretty good. D Hots is there in all-you-can-eat buffet, and how much? I'm not too sure, to be honest. I'm not too sure. I've never really been to any of those. Deborah says that's a great deal. I agree. Jay Nibs says, any thoughts on the theory of price hikes due to corporate greed / profit / inflation? Yeah, we talked about that before. I think a lot of that is nonsense, and I'll tell you why. I'm going to tell you why. And I'm more than happy to hear the other side of the argument, but I'm just going to give you as real of a real-world example as possible, because it happens in my work life, and it's actually happening right now. Just let me sort of get around this gate here. So I am in enterprise tech sales. So I sell enterprise software and hardware into the Fortune 500 and Fortune 50. And a lot of times we have to do custom builds for different router types. So let's say if a big multinational company is building out an SD-WAN network or something like that, they need routers to do that, whether that's like a cradle point or maybe we do a custom build. You get the picture. Or if we have to manufacture a proprietary RPM device or remote patient monitoring device, where that acts as like a hub to hook up multiple other things to it. Like if you hook up, I always forget the terminology and I'm in the space, but you can hook up like your pulse ox to it, your peripherals. You can hook up multiple things like that. So long story short, due to supply chain issues, due to a global semiconductor shortage, a lot of times I'll get on the phone with a lot of my OEMs who manufacture these products, and literally, I'm not lying, every single month I get on a call and they tell me that my price is going up. They say we're going to hike 15%. So if you're familiar with enterprise sales, it's not like you're selling to a mom or pop shop. You're not selling to the pizza guy where they're buying like 1 or 2 units, right? There's sometimes, you're talking multi-million-dollar deals, okay? So demand planning is so important. So when my customers cut me a PO, right, or a purchase order and say, hey Tom, I'm gonna purchase 3,000 routers, here's a purchase order, and they wire us the money and whatnot. And I have my supplier saying, oh, I know you locked in for this first order of 3,000 units, but the next order, if you're gonna do a next order of 3,000 units, we're gonna have to hike the price 15%. So now that cuts into my gross margin. So let's say if I was making 20% GM or gross margin, now I'm only gonna make, let's say 10% gross margin. So in order for me to retain my margin, I now need to pass that price hike on to my customer. And here's the biggest problem, and I'll tell you the biggest problem. Because when you're dealing with the enterprise space specifically, it's very hard to go back every month to your customer and say something along the lines of, "Ooh, I know we agreed on the first rollout of 3,000 units. You already cut us a PO. Your legal signed it. Our legal department signed it. But now next month, your next order is going to be a 20% hike." It doesn't work like that in enterprise. If anybody maybe in the chat has any experience selling into enterprise, which are large Fortune 500 companies, or maybe you're even in procurement at these large companies, it doesn't work like that. So here's what I have to do, and here's what I do today. Knowing that I'm expecting additional price hikes from my suppliers or different OEMs, what I'll do is I'll do like a double price hike on my customer. So for the first year, my gross margins, where I was originally making 20% gross margin, my margins may actually expand to 50%. So, let's say if I was a publicly traded company, which I'm not, I would get on an earnings call and say, "Hey everybody, our gross margins actually expanded to 50% gross margins. Isn't that amazing?" So the media would take that and say, "Oh my gosh, Tom Walks on Wall Street's company used to make 20% gross margins last year, and now they're making 50% gross margin because they're greedy." Well, no, the reason why I'm doing that is because I'm doing basic demand planning for the enterprise space. Because if I can't keep changing the price on my customer, what I need to do is give them a solid price, so at least it gives me maybe a year or two buffer. So as the year or two progresses, my margins will have a steady decline, or it's called decelerating margins. So I'm dealing with this right now, and this is why this week has been so stressful, is because we're custom building a basic Android device for a very, very large pharmaceutical company that wants to deploy 70,000 devices out in the field. But here's the caveat: the device cannot have any bloatware on it. It has to be completely clean, because they are actually uploading their proprietary RPM software and their telehealth software on there. And if you're familiar with IoT, if you have 70 devices out in the field and it only has to ping to the network maybe 1 or 2 times a day, if you have bloatware in the back, updating new Android software, downloading or re-updating other applications like weather apps and all this nonsense in the back, that can run up those data charges. And even if, let's say a phone uses 500 megabytes, if that just goes out of whack to, let's say, 750 megabytes a device, that may not be an issue if that's across maybe 5 or 10 devices. But when you're talking 70,000 devices, that could mean a data charge bill of $250,000 a month to a data charge bill of $1 million a month. So that's sort of the debacle I've been dealing with today. The customer says, all right, we need a custom built device. We're going to use as a hub, zero bloatware, and it's going to be all proprietary software downloaded on those devices. So I don't really agree with the narrative that, and I know I sort of went on a tangent, I tend to do that. I don't really agree with the narrative that the reason for the inflation is because corporations are greedy, because you'll have senators on both the Democratic and the Republican side come out and say, oh my gosh, gross margins are expanding across the board at these companies. They must be so greedy. Okay, well then how come, 10, 15, or even 8 years ago, how come oil companies weren't making these big profits, right? So it's not just about corporate greed that's causing all the inflation. Obviously, a politician, be it Republican or Democrat, we're going to give it to both sides here, they want to get reelected. So what do you think that these people are going to come on the television and tell you? The Republicans are going to come on the TV, on Fox News, and say something along the lines of, oh, it's not, we're trying to keep inflation under control, but it's the greedy corporations. The Democrats are going to go on CNN and say the same thing. Oh, we're doing everything we can. It's the greedy corporations. You should still vote for us. The corporations haven't changed. The politicians are the ones who just want to get reelected. So it's all about deflecting blame on other people. So in conclusion, you may have temporary increase in profits, but the reason why you do that is because when you're dealing on a massive scale, you can't keep changing and flipping around prices to people. It's not how it works. These sales cycles can last a year. I've been working on some deals that are like years in the making. And if you get down to contract negotiation and proposal and you keep flipping around the price, it's game over. It's not real. So sorry about the long-winded response, but that's sort of my take on it. And people can disagree if they want, and I'm open to hearing other sides of the perspective. But now we're on East 18th Street. East 18th. Hey, Ruby Falcone is in the house. What's up? Ruby, what's up, man? Good to see you. Good to see you. Ruby, you missed Washington Square Park. We got a little bit of a contact high walking through there today. It was insanity. But Ruby's our good moderator. She's been amazing on the channel. She's been a really, really big help. Jay Nibs says, interesting insights, thank you. Yeah, and so Jay Nibs, it's not to say that I'm exonerating corporations from all responsibility. It's not what I'm saying. I'm just saying it's not all their fault. It's not all their fault. That's sort of what I'm saying. Dr. Longus is there is blame on both sides. Yeah. And also everybody, and I think this is really good that we talked about this last night on the stream. Because last night on the stream we talked about the difference between fiscal policy and monetary policy. And I admit sometimes I could, dig a little bit too deep and really hammer on Fed Chair Jerome Powell. And so I think if we want to make the stream fair and balanced, we have to give both sides of the perspective. So even though the Federal Reserve, I believe, creates much of the inflation, I do think that we need to take on a little bit of responsibility to our politicians who set fiscal policy, Democrats and Republicans. Because at the end of the day, the difference between monetary policy and fiscal policy is that fiscal policy is set by, hold on one second. See, even though it's a red light, I never trust the cars, ever. Anyway, so fiscal policy is set by our politicians, right? They choose how to spend the tax dollars, and oftentimes run us at a deficit. But monetary policy, that's set by central bankers. And I think it's easy for everybody to say, oh, the central banks and the Fed, which I agree with, by the way. But I think it's also, it would be genuine of me to give that side of the perspective to say, look, inflation is also caused by our politicians, both Republicans and Democrats, spending too much money. Lastly, I think a big part of inflation is the supply chain pressures. I mean, guys, we just came out of a global pandemic. Okay, that's still not over. I mean, if you look at China with the zero COVID policy, many of their factories there are shut down. So what's that doing to global supply chains? And this is, I'll touch on one more thing and then I'll stop rambling. This is why I tend to only read Investors Business Daily, Barron's, and the Wall Street Journal. Because numbers don't lie. And when you watch news organizations, and I understand that the Wall Street Journal, Fox News is all under the same umbrella, I get it, but hear me out for 1 second. And I could be off base. This is just sort of how my thought process works. If you watch CNN, you're going to get propagandized from the left. If you watch Fox News, you're going to get propagandized on the right. It's just, you can't argue with that. I think everybody agrees in the chat. Maybe you don't. I'm not going to put words in your mouth. But if you read financial stuff and you maybe join an earnings conference call of one of the major companies in the S&P 500, those are the people that you should really, really be listening to, because the SEC has strict rules about forging and fudging a lot of those numbers. So it's very, very unlikely for like a 10K or quarterly reports to be fraudulent. So if you listen to what the chief financial officers or CEO or anything of these major corporations say about inflation, that is the real story. And here's what they're saying. And we talk about this almost every night on the channel. During earnings season, we literally hammer through every single earnings report. The main commonality that we've been seeing with every company is supply chains are wreaking havoc on our profit margins. Prime example number one, Target. If you are a big box retailer, like a Target or a Walmart, and you are trying to demand plan during a global pandemic when your suppliers are telling you, hey, you better start ordering stuff now because we don't even know if the factory is going to be open to produce this stuff. How do you forecast something like that? So you have to order a ton of product, and now what we're seeing is inventories are building at places like Target and Walmart. So now your margins are contracting because you brought in too much inventory. And this could actually lead to deflationary pressures. So I think supply chain is a big, big, big issue. And it's not so much greedy corporations and things like that. Because corporations are just a collective of people, right? Many of you in the chat work at these big companies. I mean, you're not out there trying to be maniacal, right? I know I'm not. I've worked for major tech companies. I just try to do my job. I don't try to rip people off. So I think if we take it from that perspective and read financial media, usually numbers don't lie because numbers are just math, and you sort of get the real story. Yeah, Jerry says inventory is cash on the shelf. Well, Target came out and said their gross margins are going to compress to 2% and that inventories are building. But check out this view of the Empire State Building. If you guys are enjoying the stream tonight, by the way, feel free to leave a like on the video and subscribe if you are new. We usually do these live streams 5 days a week, right around 8:30 Eastern Standard. Hey, photos from around New York, good point. Says, so does this mean big sales at Target this winter? It's very possible. I think a lot of their summer stuff will probably be discounted. Noodles XCX says, Tom, do you sell for a particular software company or are you a middleman for the software company? So we are a full service MSP or managed service provider. So we have a lot of deals with major software companies to resell their software. So the value proposition of our company is we'll do all the consulting work that McKinsey, Deloitte, and EY do, that they charge you $500,000 for. We'll do it for free because our company is built of a collective of men and women who have collectively over 200 years of experience selling enterprise software and enterprise telecom. So we'll do all the consulting for free, and the only time we get paid is if you choose to do an implementation and we follow through on that implementation or advise you on the best way to roll out a go-to-market strategy for like an SD-WAN environment or an EVV environment if it's healthcare for electronic visit verification. And then if you don't want to have your IT department burden themselves or you don't want to hire people for $100,000 a clip, we'll do all those managed services for you. So we'll manage your MDM, we'll manage your cybersecurity environment, we'll manage your fixed wireless, all that stuff. Hey, Carson is talking about numbers is how to lie with statistics is a very interesting read. Let me screenshot that, Carson. I just lost your comment. Let me screenshot it. Hey, Carol H says, hey, Tom and everybody, what a beautiful night in Manhattan. Carol, it's good to see you. We're actually about to walk, well, not about to, but we're going to walk past your old stomping grounds at Herald Square. Hopefully you're having a good Friday. Hey, Nicholas Duras says, hey, Tom, watching you on the VR headset. Wow, it looks beautiful. I would love to know what the stream looks like on a VR headset. This building right in front of us, everybody, is actually the Flatiron building. And I believe it is going under full restoration as why you see the scaffolding all up and down the building. Hey, Dutchman, says Tom, yes, Walmart is having empty shelves here in some of the stores in Phoenix, Arizona on high volume items, but still keep raising prices on everything, even items that don't move off the shelves. What's with that? I think that down as inventories build. Roberts is, good to see you, Roberts. Carlos is here. I'll give you guys one last look at the Empire State Building, and then we'll walk up Broadway, because Broadway is going to have amazing views of the Empire, really, really amazing. But if you guys sort of like what we talk about on the stream, and you want to stay up to date on my thoughts on the financial markets and the economy, if you scan the QR code on your screen, it'll bring you to a landing page where you could punch in your email, and every other Tuesday, I'll send you a free investing newsletter where I give you my take on not only the US equity market, but emerging markets as well, fixed income, and the housing market. So if you scan the QR code every other Tuesday at the close of the market, about 4:30 or 5, I'll send you a free investing newsletter where you guys could stay up to date on a lot of the topics we talk about here on the stream. So feel free to scan it and join us over there. And this Tuesday will be our 23rd issue of the Behind the Street newsletter. So just feel free to scan it, punch in your email, and we'll see you next time. Hey Carson, have a good weekend, my friend. Hopefully you have good things planned for the weekend. Enjoy it with your family and your friends, and we will see you next time. Maybe we'll see you tomorrow. Hey, D says New Orleans, Sweden, Finland. All right, good to see you, D. Hey, T&Me TV says just tuned in. Good to see you. Good to see you, T&Me TV. FHL says any recommendations looking for a good low cost or no cost basic register and point of sale, no frills. I would recommend Toast. I would recommend Toast or Square. This guy has a really nice electric board. I don't usually ride electric boards, but they are good to, they are nice to look at. Jay, yeah. Hey, Russ is hello from North Carolina. Good to see you. Let's see what we got here with the construction. It looks like they may be repaving the road, which is really good to see. Oh, they are. So this is going to be really good this summer when we're skateboarding down here. You know, I do have to give credit to the city. I do really have to give credit to the city because what they're doing right now are pretty much repaving every single road in Manhattan. And I think that is very, very long overdue. Extremely, extremely long overdue. So that should be good this summer as we're skateboarding through the city. We should have the skateboard tomorrow, by the way, everybody. As we, hopefully the rain will hold off this weekend. So. I understand everybody has an opinion on the vaccine, but could we just not talk about the vax? Because we will get the channel taken down. I kind of like streaming for you guys, but I get it. We already have a strike on the channel for that, so I would just appreciate if you guys just respect that. And I respect everybody's opinion on it. I do. I think you should have your own choice to do whatever you want. But unfortunately, we are on YouTube, which is not owned by me. And we will be taken down. So I just ask respectfully just to not talk about that stuff. Yeah, Western Mass Dave, I already have one. So one of the strikes fell off. We won't talk about strikes. The YouTube gods are probably listening and watching. Hey, JL is here. Good to see you, JL. Always a pleasure to have you here, JL. Happy Friday to you. Hopefully you have some interesting things planned for the weekend. Oh, everybody, it is a long weekend, I believe. I believe Monday is Juneteenth, so I believe the majority of us may have off. Which is nice to have a day off. Yeah, Gregory says Alphabet runs a very tight ship. Ooh, check out these Dalmatians. Are these Dalmatians? Any dog experts in the chat? They look like a Dalmatian mix. Wow. Those are good looking dogs over there. Yes, and Saturday is Father's Day. So happy Father's Day to all the fathers out there. And a special happy Father's Day to all the Walks on Wall Street fathers that watch the stream. So hopefully you guys will be able to have quite enjoyable weekend, or long weekend at that. Hey, NMB 045 says next Friday is also a holiday in Quebec, celebrating Quebec nationalism. Very nice. Love to hear that, NMB 045. JL says, Tom, I don't have to leave home to go to the beach. Down at the Jersey Shore, no crowds or parking spaces to look for. Just my in-ground pool will do. Awesome, JL. Love that. Well, please enjoy it, my friend. You deserve it. Cynthia Beal says, good night, Tom, and everybody have a great weekend. Cynthia, thank you so much for joining tonight. Thank you for coming along with us on our journey. Pavel says, thanks so much for walking Midtown, my favorite part of Manhattan. Lots of respects and more power to you. Thank you. I appreciate that. So we're headed towards Midtown. We were walking St. Mark's Place, Washington Square Park. But I believe this is a brand new ice cream place with a pretty cool outdoor dining setup here. So Broadway is actually closed off to all car traffic, which I agree with. I think it looks rather European, does it not? As you see everybody eating outside, having a good time. Hey, Robert is here. Good to see you, Robert. Says, nice job, Tom. Hey, Elliott Wave Reviews says, Tom, in all honesty, do you think it's acceptable in the land of the free to have to avoid certain topics? Not really. I don't, Elliott Wave Review, but at the end of the day, I don't control any of that. And that's not really a battle I need to fight right now. But I totally understand what you do. But listen, I like doing the stream. It's something I do to relax after work, and I don't want to fight about the COVID-19 vaccines, in all honesty. It was quite a hell of a week. Sometimes I could work 12 hours a day, and I understand it's a very turbocharged topic, but if we do talk about it, I just don't want to have to deal with the stream getting taken down, because I don't know, I kind of like doing it. I enjoy it. I like speaking to all of you guys. I like hearing what you have to say. But wow, check out how long the line is. Let me just give you guys some perspective here. Hey, Hemp Lord is here. Good to see you, Hemp Lord. Welcome. Yeah, bagels and walks, like it's all good vibes regardless of the market. Hey, Gustavo, thank you for taking the time to show us New York. No problem, Gustavo. Thank you for being here. So we'll head up towards Koreatown. We also have to head up by Central Park. That is our final destination for tonight. So I think we're right on time. I can't believe we've already been streaming for 2 hours. Paradoral says, Tom, what would you What would your net worth have to be for you to stop doing the live stream? I don't really make money off this. I just really do it for fun. And I really do it, honestly, I really do it for the relationship building. You guys would be surprised. I mean, you guys are very intelligent and smart people. I've met just an overwhelming amount of people from doing YouTube. And we have an extremely small channel. We have 16,000 subscribers, which I am so grateful for, and I appreciate. All of you are fantastic. But in the grand scheme of things, I mean, think about from the people we've met, from the relationships we've built through this channel, through the ideas we've shared. I mean, that's invaluable. So I think I'll do it as long as I enjoy it. I think as long as it's enjoyable for me and I look forward to doing it after work, I'll do it. But if it ever becomes burdensome or I don't enjoy it, I won't do it. Yeah, Billy's like, I appreciate your consistency. Yeah, I mean, if you guys think about it, man, we sometimes stream for like 2.5 hours a night, 5 days a week. If I didn't enjoy it, I think it'd be pretty hard for me to continue to do it. I honestly really just enjoy it very, very much. And again, the people that we meet, the connections we make from all over the world. I mean, you guys should see my email box. Obviously, I'm not going to disclose that. But, I mean, people from all over the world, from all different types of walks of life. And I think that is just, it's fantastic. Chitbot says, it looks very peaceful, not crime-ridden. Yeah, it is rather peaceful tonight. A lot of people are out, which is good. So this is Milk Bar, which is a very famous like ice cream and milkshake place. War Walker says, where'd you get the energy from, Tomcat? What's your secret? I really just think it's about, so here's something interesting that I've noticed. Whenever I have, is the term sedentary? Am I pronouncing that wrong? If I'm pronouncing it wrong, feel free to rip me in the comments. But whenever I feel like I have a sedentary sort of lifestyle, so I'll give you an example at work. So my previous job, sometimes I'd be at my desk Monday through Wednesday, making calls, emails, sitting down for 8 to 9 hours. I've never felt more exhausted in my life than doing that. But I noticed on Thursdays and Fridays were the main days where I would have to go out and see customers, go on appointments, take them out to dinner, do the whole wining and dining. Those are the days that I had the absolute most energy ever. So I think it's all about things in motion tend to stay in motion. So I'll have a really, really long day at work, and then I'll start the stream and start walking, and mile 3, mile 4, it's almost as if like I just had 2 cups of coffee, I had a full night's rest, and I'm ready to go. I think if you stay in motion, it could be even a little thing. It's, maybe if you're sitting at your desk, you're a little bit tired, find a corner somewhere in the office and bang out some push-ups. Bang out 5-10 push-ups, you'll feel like $1 million. So I think where I get the energy is I just keep moving, maybe, in motion. And a big hack for me, if anybody has an office job, and you guys know I'm in enterprise tech sales, get a standing desk. It's worth the money, I'm telling you. If you have to sit down all day, it is not good. I used to do it for many years. I invested in a standing desk. I think I spent like $1,500 on the desk. It has an electric motor and everything. Total game changer. Try it out. Trust me, it's worth the investment. You don't have to spend $1,500. Maybe there's a cheaper desk, but trust me on this one. Invest in a standing desk and your energy levels will just absolutely moon. Trust me on that. Bagels and Walkers, you can get an affordable one from Amazon or IKEA. Def agree on the standing desk. Yeah, so I probably did spend a little bit too much money on it, but I figured that I should get a good one if I'm going to spend 8 hours a day standing in front of it. So mine has like a motor. I could program like adjustments into it based upon, if I want to stand up straight or things like that. But standing desks are fantastic. All right, everybody, we are here at Koreatown, 32nd Street. Hey, War Walkers is AA hiring home agent for their reservation call center for $13 plus flight benefits and medical insurance. Christina says, don't sit on cushions either. NMB 045 says, we had standing desks in my previous employer with the button to adjust and sit when you feel like it. Yeah, so NMB 045, that's the exact one I have. I'll send you a picture of it. Well, when we do the behind the desk streams, so next week, I think on Tuesday, we should have our first behind the desk stream. And you guys will be able to see the desk. Hey, Palmetti, it's good to see you. Chipbot says you could sit on a giant inflatable ball. I've seen people do that as well. I have people seen people do that as well. Pavel, so we are on 32nd Street, West 32nd Street, Korea Way, and Broadway. So this is not 5th Avenue, this is Broadway. If you want to go to 5th Avenue, it is one more avenue over this way. Hey, SME Media says New York City is so great this time of year. Everybody's out walking. SME Media, hopefully you had a good week. Happy Friday. But yeah, we'll walk over to 5th Avenue. We might as well. Hey, Sherry Rodrigo, good to see you. Welcome, Sherry. We are in Koreatown now. Jay says get a standing desk with the treadmill. There is a WeWork office. I forget where it is, but they do have one of the standing desks with the treadmill. I don't know if I could do that because, I don't know. I think it'd be a bit too much of a distraction for me. I feel like I would goof around on it too much. But that's because I have a horrible attention span. Hey, Line Sync says, hey Tom, Walks on Wall Street people. Thought I might have missed the stream, but I'm here. Well, it's a pleasure to have you here as always. Elliot Wave Reviews says, I agree about the standing desk plus the push-ups and squats and burpees a couple times. Yeah, I mean, even if you don't have to be like a huge workout junkie, I'm not at all. But if you're feeling tired and you're feeling drowsy, try it. Just go find a corner somewhere in the office, bang out 10 push-ups. You're gonna feel like a whole new person, I guarantee it. And I learned that from this guy. I'm not sure if anybody's read his books. I believe you pronounce his name Jocko Willink, but he's was one of the head Navy SEAL commanders in the Battle of Ramadi, Iraq. And this guy is a total tank, and he has really, really good books out that covers management skills, productivity skills. So check out his books. I'm blanking on the names of his books, but all of his books are fantastic, are absolutely fantastic. I think one of his books is called, I have them all, but I'm just blanking on the name. Man, now this is killing me. I gotta remember the name of the book. Extreme Ownership, that's what it is. Extreme Ownership by Jocko Willink. That is probably one of the best books I've read so far about productivity and the like. And also just about taking responsibility for stuff. Yeah, Elliot Wave Reviews says Jocko Willink is great. I would recommend following Cameron Hanes and David Goggins as well. So I've heard of David Goggins. I haven't heard of Cameron Hanes. I'm going to check him out, but that book really had a big impact on me. and it talks about taking just responsibility for everything in your life. Because if the theory is if you blame other people for your problems, it automatically puts you in a position where it's impossible to change your circumstances.
That's probably where my been.
But if you take full responsibility for every single thing that happens to your life, and I'm talking about everything, well, now you are in the power to change that. So you never want to give up control. You want to maintain the frame and keep the frame for yourself, and take extreme ownership over your life and not blame other people. Because if you blame your boss, if you blame your spouse, if you blame your brother, sister, grandmother, your dad for the problems in your life, you're never going to be able to change it because you're giving those people power. But if you say, listen, it's not anybody else's fault but my own. I'm going to start to be an adult and pony up and take responsibility for myself. Well, now you're in the game, you're in control, and you could do whatever you want. That's really disgusting right here. But we're about to cross 5th Avenue here, everybody, on 32nd Street, where one of my favorite places, well, yeah, I would say my favorite place. It's called Baekjeong, which is one of my favorite Korean barbecue restaurants in the city. And in addition to that, it has one of the best views of the Empire State Building, which we're going to see in a minute. Hey, Flowing Happy, thank you so much for the $10 donation. You're way too kind. It says, yay, Koreatown, love it. Yeah, Koreatown's one of my favorite places in the city. I would say probably top 5 or top 10. We're at the red lights, we have to stop. So right behind Love Korean Barbecue, you'll have Baekjeong, which is fantastic. But once again, Flowing Happy, thank you so much for the donation. Really appreciate it. Jerry says adulting is worth the effort. I agree. Yeah, war walkers like the rats are eyeing that slop as we speak. Hey, Pavel says my friend Peter, who is a friend of ex-personal assistant of Freddie Mercury. Whoa, from Queen. Send you love and hello. Wow, well, thank you. I really appreciate that. That's so unique. Wow. FHL says, do you think all outdoor restaurant structures will stay up like it is in Europe? So that's a good question. I may have to defer to photos from around New York on this one, because sometimes he's a little bit more up to date on the rules, regulations of New York than I am. But I think something along the lines of they're going to take the majority of them down now that the pandemic is starting to end. But if it were up to me, if I was the mayor, if I was Mayor Eric Adams, I would keep them up. I actually kind of like them. But guys, check this out. I think this is one of my favorite shots of the Empire State Building. Webley says, why would he talk to Antifa? Hey, Sophie M says, we call this taking a brain break. I'm in my early years teaching, and the kids use strategy daily with the kids. Hey, that's awesome, Sophie. That's awesome. Yeah, Ruby's like the twinkling is so pretty. I agree. Beautiful. I give this view about 9.1. I'd say about a 9.1. I think if it was the colors of the American flag, the red, white, and blue, or the holiday colors, it'd probably bump up to maybe like a 9.7, maybe 9.7. I think that's fair. Yeah, Ruby, it is the 9.1 because the color scheme is, I mean, I love the color scheme, don't get me wrong. I get that. But it's not my favorite color scheme. Yesterday we saw the red, white, and blue color scheme. I think this view with yesterday's light projection brings it up to, you know, the mid to higher 9s. So if anybody is watching this stream, maybe you're thinking about visiting New York City, I recommend this almost over any restaurant in the city. So this is New York City's #1 Korean barbecue restaurant, Baekjung. It's fantastic. You got to come here. If you want a little bit more, if you want a different style Korean food, you got to go to Take 31, which is on 31st Street, which is fantastic as well. So please check out those two. Yeah, Jared Vincent is like, it's glistening gold today, hinting us to buy gold, I know. But guys, no more, so another thing that's crazy that I've noticed about the YouTube algorithm, anytime you put something in the chat, like you type things in the chat, the algorithm will find those people on the internet and recommend the stream to those people. So let's not talk about anything Antifa or Proud Boys, because I just don't want to deal with these people coming up to me on the street and yelling at me, please. So no, I may have to block that word Antifa or Proud Boys. I just don't want any political activist group coming up and heckling me in the streets, please, please. But we will walk up 5th Avenue, past 33rd Street, and we're gonna have a good view of the Empire State Building right under, right at the main entrance to the Empire State Building. So this is 5th Avenue, 33rd. Oh, we got the spam bots coming out tonight. Hey, Sunshine, New York City. Good to see you. Sunshine, are you gonna make your way out to Jones Beach this weekend or what? I may go to Jones Beach this weekend. All right, check out this view, everybody. This is one of my favorites. Oh, I think it's best seen right here. Tell me that's not a unique view of the Empire. Chitbots is all the scaffolding permanent. So it's not permanent, but usually the building owners tend to leave the scaffolding up as a way to get out of investing and making the necessary restorations of the building. Usually. Yeah, sunshine after rains is epic, isn't it? I'll give you guys one more view. So this is 355th, I believe. We'll move out of this guy's way because he's backing up, but if you guys are enjoying tonight's stream, feel free to leave a like on the video and subscribe if you are new. We go live 5 days a week in New York City and Miami, talking about the economy and many other things. Hey, Millie's here, says love the Art Deco structure. I agree. I like that too. You know what, let's walk all the way down 34th. I believe Carol H. Used to live in the building on the corner of Broadway overlooking the Macy's sign, or one of the original Macy's sign. But now that we are approaching hour 2, we'll just give a quick recap of the topic of the stream tonight. Even though I think we covered pretty much everything, guys. I think we did a good job. But the first thing we covered on the stream was Ron Barron. Oftentimes I will bring up and bring attention to notable successful money managers on Wall Street. So oftentimes we talk about the likes of Stanley Druckenmiller, Paul Tudor Jones, Ray Dalio, Peter Lynch, you know, all the greats. Also William J. O'Neill, which is the founder of Investors Business Daily. But there's one money manager we seldom talk about. His name is Ron Barron, and he founded the Barron Funds in 1982, I believe in March of 1982, during the bear market, by the way. And Ron Barron has outperformed the market in his funds over the past 3, 5, and 10 years by a very wide margin, by the way. And I think his most notable trade was investing in the Tesla. I believe we had one of our viewers here in the chat say that his average price, split adjusted, was $50. So Ron Barron likes to take an approach where he looks for companies that are in a massive total addressable market, or a TAM, that are compounding out their annualized growth rates, have explosive revenue growth, explosive earnings, fantastic pre-tax and after-tax margins, as well as fantastic return on equity, or ROE. So Ron Barron did an interview with CNBC today, earlier today. It may have been tomorrow. And Ron Barron said this stock market sell-off is presenting Americans with a monstrous, to use his descriptive terminology, generational buying opportunity. Now, this is not to say that Ron Barron is calling a bottom here. I don't think that's what he's doing. But I think he's signaling that if you have excess capital on the sidelines, this wouldn't be the worst time to start to put your money to work. So if we look at the S&P 500's forward PE multiple, we're trading at about 15.5 times projected forward earnings on the S&P. If we look at the previous most recent 2 bear markets, which was the 2018 bear market, where we put in a bottom right on Christmas Eve, as we're standing outside of 34th Street, Herald Square, and Macy's, the S&P had a forward PE multiple of 13.5 times forward earnings. In 2020, COVID crisis, the S&P had a forward multiple of 13 times projected forward earnings. So right now, as of today's close at 4:30, the S&P closed at 3,674, I believe. So if we want to buy the S&P 500 with a forward PE ratio of 13, that would imply a purchase price of the S&P 500 of 3,200. So so that would mean we would have about 450 points to go, or about an additional 12% sell-off in the index. In which case, I think that would be a fantastic generational buying opportunity. But that's not an exact science, because as we've talked about today on the stream, one of the most important things that we need to take into consideration when talking about a forward PE projection is that these earnings are just that, they're projections. And if the US economy falls into a recession, those earnings estimates could actually go down. In which case, if earnings come in worse than expected and analysts revise those estimates lower, well, then that forward PE ratio will actually be higher. And if we want to buy the S&P 500 at 13 times forward earnings, well, then that means the S&P 500 may need to drop even further to, let's say, around 2,900 or something like that. So in conclusion, I think I do agree with Ron Barron, arguably one of the greatest money managers of our generation. They're located right here in New York City. I think their office is on Park Avenue. So I think if you're young, maybe you're earlier in your career, or you're just getting started in the market, not financial advice or anything, but I think if you were to hypothetically buy the S&P here, I think in the next 10 to 15 years, corporate profits are going to go up. And I think the S&P 500 will be higher 10 years from now than it is today. I think we're going to go through this recession, we're going to make it out of the stock market sell-off, but it may take a little bit longer than usual. This bear market may last 2 to 3 years because we have a lot more debt now, and bond markets are really, really feeling the heat. So that was just a quick recap of what we talked about tonight. Hey, Dusty Cole is joining us. What's up? Says, hey everybody, Tom. How are you doing? Late but not absent. Dusty Cole, the party is starting. Patricia Ivory is here. Says, I love the building views that you give us in New York. Thank you so much, Patricia. Jason Francis, thank you for being here. Good to see you. Hunter Butler is here. Hey Hunter, what's up? So this is probably, if this light wasn't here, everybody. Okay, yeah, maybe if I cover it. Okay, this view right here, the Empire, is like 8.9, but with the light, it's probably like an 8.3. Still good, but this is Macy's, and it is all decorated for Pride Month. Jason Francis loved the New York Yankees logo. Chitbot says if everybody in the stock market was smart about their investments, the stock market wouldn't work. You know, that's a really thought-provoking comment that I appreciate. I'm actually going to take a screenshot of that. I really like that comment. Caddy says, okay, I was just trying to make a point of how ridiculous the terminology is. Whoever made that word up should have to repeat English in high school. Which word? Hold on, I've missed a lot of the comments. I'll have to scroll back. Sorry about that. You may have to type it in again. I apologize. Hey, Kevin Beck, good to see you. All right, everybody, we got some more walking to do, so we better get started. Adulting, copy that, agreed. Johnny says, I try my best to find and skip around it, yep. D-Hot says, how low will Bitcoin go? I think we're gonna see a lot more liquidations. So another topic of tonight's stream was 3 Arrow Capital, which was the $3 billion cryptocurrency hedge fund that is now insolvent, going out of business. So I think with the extreme leverage we're seeing in this environment, I think you're gonna see a lot of forced liquidations, a lot of margin calls. And here's, I think, where the biggest threat may lie. Where I actually have to do a little bit more work on this before I really formulate a thesis. But I think it's going to have to do with how leveraged a lot of the miners are. And I won't explain why now because I have to do a little bit more work on it. But we'll talk about that later. Hey, Nicomotus, just cool, says I'm a new subscriber, good vibes. Hey, thank you so much for joining the channel. I appreciate it. So I'm gonna give you guys probably one of my favorite views of the Empire State Building of all time, which is right here, right outside 1333 Broadway. And I think this view may be a 10 out of 10. Hey, Robert is here. Says, what's up, Tom and friends? Good to see you, Robert. Always a pleasure. Happy Friday. Any plans for the weekend, though, Robert? Johnny says, so is our money safe in the banks, or should we store our money in a safe at home? I don't know if I would ever want to store my money in a safe at home. But I would say, if you're keeping your money in a bank, just make sure it's FDIC insured. You know, this topic reminds me of, does anybody remember that Mad Money episode with Kramer? He's like, no, don't sell Bear Stearns. Bear Stearns is fine. And then they go bankrupt, they go belly up. That was a low blow. I shouldn't have said that about Kramer. Everybody gives him a lot of flack. I shouldn't have said that. Hey, Line Sing says the sky behind the Empire State Building looks very dark. Indeed, it does. We'll cross the street over here. Wow, everybody, you notice how a ton of people in the city. You know, I think it may be summer vacation for a lot of the college students now. Right? Doesn't college end at the mid-June? So maybe everybody's taking like a trip to New York City or something like that. Graduations, aren't they going on now? Dusty Cole. Yeah, that was my shot at what is it called? A Philly accent. You know, somebody that used to work for Kramer that he really never talks about is Martin Shkreli. So Martin Shkreli is actually out of prison now, but he actually used to be an intern at Jim Cramer's hedge fund. So this is Broadway and West 38th Street, everybody, in Midtown Manhattan. Headed up Broadway. We're about to run into Times Square, but I think before we do that, we may make a right on 42nd Street and cross over to Bryant Park. Ooh, look at this roach. They move fast. The roaches move extremely, extremely fast. So the building on the left, there's a company called Third Bridge, which competes with the likes of Guide Point. So I'm not sure if anybody's heard of those two companies. Yeah, sunshine after rain, I'm always on roach watch. No roach could ever get through me. I refuse to let that happen. These are the brand new city bikes, which look awesome, by the way. So here's a tip for anybody who's not familiar with roaches. If you see a roach, never, ever, ever step on a roach, ever, ever, under any circumstance. I'll just give you that little tip. But this building here houses Third Bridge, which is a competitor to Guide Point. So I'm actually in the Guide Point program, so I'm one of the consultants there. And you know, sometimes if they ever have a job where they have a client that wants to know about the enterprise software market or the telecom market or the MSP market. Oh, I think she dropped her shoe. Oh, he's got it. Guide Point will reach out and say, hey, we have a client or a hedge fund or something like that that wants to learn a little bit more about the IT market or something like that. So that's sort of what Guide Point and Third Bridge do. Yeah, ABX girl, so New York City bugs will chase you. ABX girl, good to see you. All right, we're gonna go up one more block. We're not gonna walk through Times Square. I don't think I have the mental fortitude for that today. And then we're gonna make a right.
Are you recording me? You're not recording me.
Jay says, did you get your home in Florida pest controlled? I actually did. Yeah, so I actually renewed the contract for our termite contract.
Recording, brother?
So supposedly in Florida, well, coming from Long Island, you have extreme termite issues, but there's also extreme termite issues in Florida as well. Now, the house never really had termite issues because the house is a complete and total concrete block, but I did renew that policy. So I think once a year they come out and they drill holes in the ground or something like that. The guy was drilling holes and putting, what's it called? Like the termite poison inside the foundation or the slab of the house. Yeah, sunshine after, he's like, let's not go there. Yeah, I mean, especially after the week this week was definitely a crazy week. So I don't think I have the mental capacity to deal with Times Square tonight. Sunshine, New York, like, oh man, people are annoying, glad. Yeah, so Sunshine, New York, over the past like 3 to 5 years, I've adopted a strategy. It's just to pretend like I don't even see these people. It's like I pretend they don't even exist. Someone could be like literally right in front of my face talking to me and trying to get attention. If you just completely go limp and numb and pretend like they're not even there, it's so strange. Like they'll just vanish away. Because if you give people attention, that's what feeds it. But if you just completely act like these people aren't even real, their motives deteriorate. It's no fun to try to get a rise out of somebody who doesn't feel any emotion. But if they get emotional, then, you know, that's when everybody starts to come out of the woodwork. A lot of people tonight, but we're gonna make a right here. And we are going to head towards the One Vanderbilt building. All Medis, I know. Hey, Traveling D is here. Hey, Traveling D. Hope you're well. This is good to see you. Wow, Ryan Royal's like, if I turn all the lights off in my house, the city lights are lighting up the stream. That's funny. Hey, Talvish is here. Says, hey, Walks on Wall Street. Good to see you again. It's good to see you again as well. Good to see you, Talvish. Dolly Girl Twins. Chipbot says New York Times Square is like when you accidentally open the wrong website on multiple advertising showing. Yeah, I know. But everybody, I think we'll just make it to Central Park. We'll just make it to Central Park because the phone is on about 20% battery. So if you enjoy the stream tonight, feel free to leave a like on the video. Subscribe if you are new. Tuesday we'll have the Behind the Street newsletter out. But we'll end the stream at Central Park, so we have about 20 more blocks to go. But right now we are outside of the Salesforce Tower, which is a publicly traded enterprise software company, SaaS company, software as a service specializing in customer relationship management software. So that is Mark Benioff's company. You know, they actually did complete their acquisition of Slack, which was a formerly publicly traded company under the ticker symbol WORK. But we're going to cross the street to Bank of America Tower, where we'll have a little bit better view of the Salesforce Tower. Salesforce actually had a pretty decent quarter. We covered that on the stream. And here's another view of the Empire State Building, standing right on the corner of Avenue of the Americas, 6th Avenue and 42nd Street. Cayenne Pacific is here. Says, nice Friday night. Good to see you, Cayenne Pacific. FredX, welcome. DN is here. Says, the city is always magical. Good to see you, DN. Always a pleasure. Millie says, I wonder how difficult it is to get a permit for the food trucks. I imagine the one near the Subway Makes Bank. Yeah, so I think they cost a lot of money too, the permits, to your point, Mike, or Millie. Dustin says, have you seen a video of New York City in 1930s? It could still be a big modern city. Diana says, great and very good information to listen to. Thank you. If you guys want to connect with us on Twitter, if you follow @WalksWallStreet, throughout the day I post much of my equity research, my thoughts on the market, and many of the people we spoke about tonight on this stream I actually would recommend you follow them on Twitter as well, because there's so many good money managers on Wall Street that are willing to share their equity research and their macro research for free for everybody. So please check us out at Walks on Wall Street. Hey, Webley Coffee Spill says our company uses Slack all the time. Yeah, I think it was a pretty good acquisition by Benioff. Dusty says, do you have a Discord? We do have a Discord. But everybody, I'm on 9% battery. So I do have to use my phone for my Long Island Railroad ticket. So I think we'll end it here, but not to fear, not to worry. I know everybody's getting a little bit emotional. I get it, the dopamine is going down now that the stream is ending, but it doesn't have to go down forever. So if you want an extra hit of dopamine, feel free to scan the QR code, and every Tuesday or every other Tuesday after the market closes, I will send everybody a free investing newsletter, not only covering the US equity market, but the housing market, fixed income, and the like. So if you like what you hear on tonight's stream and the streams previous to this, feel free to continue that conversation on the Behind the Street newsletter channel. So scan the QR code, punch in your email, and you'll be signed up. Join us over there. If you like the stream tonight, please feel free to leave a like on the video, subscribe if you are new. And everybody, lastly, thank you so much. I had never ever in a million years imagined that this channel would grow to 16,000 people. I mean, I am so thankful, so grateful for everybody who chooses to tune in, have a good conversation, and I learn a lot from all of you, so I really appreciate that. Thank you for joining me every single night, well, 5 days a week, 8:30 Eastern Standard Time, so thank you for that. So Dusty Cole, thank you so much. War Walker, I appreciate it. Sunshine After Rain, thank you for being a phenomenal moderator. Ruby Falcone, thank you for being a great moderator. Paul Medes, Fredex, Mohammed, Nicholas Dura, Gregory, Kurt Flirt, Ryan Royal, I appreciate it. Line Sync, Mohammed H, Mohammed M. A lot of Mohammeds tonight. Good to see everybody. Wendy England, welcome. Thank you for joining. Mr. Ming, the Dope Dealer. Photos from around New York, thank you for being a great moderator. You've done so much for the stream and I appreciate it. Pavel, thank you so much. And to the Mighty Bull. Guys, I know the markets are crazy, I get it, but there's always a bull market somewhere and you just need to know where to look. So I'll see you tomorrow, 8:30 Eastern Standard Time. And enjoy your weekend, enjoy your long weekend. Have a good one, everybody.